Now, the most well-known way to make money with crypto is through trading. Think of it like the stock market, but instead of company shares, you're buying and selling different cryptocurrencies. The goal is simple: buy low and sell high. Of course, it's easier said than done. There are tons of different trading strategies out there, like day trading, where you're making multiple trades throughout the day to capitalize on small price movements. Then you've got swing trading, which involves holding onto your crypto for a few days or even weeks, riding out those price swings. And let's not forget arbitrage trading, which is all about exploiting price differences of a cryptocurrency on different exchanges. But here's the thing: trading can be risky, especially if you're not careful. You need to be ready for some serious volatility. That's why it's crucial to set up those stop-loss orders to automatically sell if the price drops below a certain point. And on the flip side, use take-profit orders to lock in your profits when the price hits your target. Don't go in blind. Stay updated with the latest market news. Do your research, and for the love of Satoshi, start small. Don't put in more money than you can afford to lose, especially when you're just starting out. Remember, trading is a marathon, not a sprint. Now let's talk about a more passive way to earn in the crypto world: staking. Imagine this: you buy a cryptocurrency, hold on to it, and it magically generates more crypto for you. That's staking in a nutshell. It all comes down to how certain blockchains work. You see, blockchains like Cardano and Ethereum 2.0 use a proof-of-stake mechanism, where instead of miners you have validators who lock up their crypto to secure the network and validate transactions. And guess what? They get rewarded for it. So, when you stake your crypto, you're essentially becoming one of these validators. You're delegating your crypto to support the network, and in return, you earn staking rewards, kind of like interest on a savings account. Now, staking might not bring you those crazy overnight riches, but it's a reliable way to earn passive income on your crypto holdings. Plus, it's a great way to support the growth and security of your favorite blockchain projects. Of course, there are risks involved. The price of your staked crypto can still go down, and some staking platforms might have lockup periods, meaning you can't access your funds for a certain amount of time. The key here is to do your research, choose reputable staking platforms, and understand the risks involved before you jump in. But if you're looking for a way to put your crypto to work and earn some passive income, staking is definitely worth considering. Now let's talk about a strategy that requires patience, discipline, and maybe a strong antacid: HODLing. You've probably seen this term thrown around in the crypto space, and it basically means holding onto your crypto for the long haul, no matter what the market throws at you. The idea behind HODLing is that over time, the value of your chosen cryptocurrencies will increase significantly, even if there are short-term dips and crashes along the way. Remember, the crypto market is still relatively young, and like any emerging market, it's going to have its fair share of ups and downs. But here's the thing: if you truly believe in the long-term potential of crypto, those short-term fluctuations shouldn't scare you. In fact, they can even present buying opportunities. Now, HODLing isn't just about blindly holding on to any random cryptocurrency. It's about doing your research and choosing projects that you believe in. Projects with solid fundamentals, strong teams, and real-world use cases. Once you've identified those promising cryptocurrencies, the key is to diversify your portfolio. Don't put all your eggs in one basket. Instead, spread your risk across multiple cryptocurrencies to minimize your exposure to any single project. And finally, when it comes to HODLing, security is paramount. Remember those horror stories of people losing their crypto? Don't let that be you. Use a cold wallet, a physical device that's not connected to the internet, to store your long-term crypto holdings. It's the safest way to protect your investment from hackers and online threats. Alright, let's dive into the exciting world of decentralized finance, or DeFi for short. Now, DeFi is all about recreating traditional financial services like lending and borrowing, but without the need for banks or intermediaries. And one popular way to earn passive income in the DeFi space is through yield farming. Think of yield farming like putting your crypto to work in a high-yield savings account, but instead of a bank, you're interacting with smart contracts on a blockchain. You lend out your crypto to others, and in return you earn interest and other rewards. The beauty of yield farming is that the returns can be significantly higher than what you'd get from traditional savings accounts or even staking. But here's the catch: higher returns often come with higher risks. You see, the DeFi space is still in its early stages, and there are risks involved. smart contracts can have vulnerabilities, platforms can get hacked, and the value of your crypto can fluctuate wildly. That's why it's crucial to do your due diligence before jumping into any yield farming opportunity. Look for audited platforms that have been vetted by security experts. Pay attention to the APY, or annual percentage yield, which gives you an idea of the potential returns, but remember, high APYs can sometimes be a red flag. And as always, don't put all your crypto in one basket. Diversify your yield farming investments across different platforms and protocols to spread your risk. Now, let's talk about the wild world of NFTs, or non-fungible tokens. These unique digital assets have taken the world by storm, and for a good reason. NFTs represent ownership of one-of-a-kind digital items, from artwork and collectibles to virtual real estate and even in-game items. And the crazy part? People are spending millions of dollars on them. Just recently, a digital artwork by Beeple sold for a whopping $69 million. So, how can you get in on the action and potentially make money with NFTs? Well, there are a few ways. You can buy NFTs on marketplaces like OpenSea and Rarible, hoping their value will appreciate over time so you can sell them for a profit. It's like collecting rare baseball cards or limited edition sneakers, but in the digital world. If you're feeling creative, you can even create and sell your own NFTs. Got a cool design, a catchy song, or a unique piece of digital art? Turn it into an NFT and see if it resonates with collectors. But here's the thing about NFTs, it's still early days and the market can be incredibly volatile. Just because something is an NFT doesn't automatically make it valuable. So how do you avoid getting caught up in the hype? Focus on NFTs with strong communities and active developers behind them. Look for projects that offer real utility or have a unique value proposition. And always verify the authenticity of an NFT before you buy it to make sure it's not a fake or a scam. Alright, now that you've got a taste of DeFi with yield farming, let's explore even more ways to put your crypto to work and potentially earn some serious returns. DeFi protocols are constantly evolving, and with that comes a whole new world of opportunities. One popular option is lending. Platforms like Aave and Compound allow you to lend out your crypto to borrowers and earn interest on your assets. It's like being your own bank, but with potentially higher returns than traditional lending. Then there's liquidity mining, where you provide your crypto to liquidity pools that power decentralized exchanges. These exchanges rely on liquidity providers like you to facilitate trades, and in return, you earn trading fees and other rewards. But remember, with great power comes great responsibility. DeFi protocols can be complex, and there are risks involved. Make sure you understand how each protocol works before you deposit any funds. Look for protocols with a proven track record and a strong security audit, and as always, don't put all your crypto in one basket. Diversify your DeFi investments across different protocols to minimize your risk. So there you have it, guys, a crash course in the different ways you can potentially make money in the exciting world of cryptocurrency. We've covered everything from the basics of trading to the intricacies of DeFi and NFTs. Remember, the key to success in the crypto world is to do your research. Start small and never invest more money than you can afford to lose. It's also crucial to stay informed, be aware of the risks, and never stop learning. The crypto space is constantly evolving and there's always something new to discover. So, are you ready to join the crypto revolution?